This video reviews Marubeni Corporation's financial results for the second quarter of fiscal year 2026, covering the period from April to September 2025. Marubeni Corporation is a major Japanese general trading company, Sogo Shosha, engaged in a wide range of businesses worldwide. It is one of Japan's top 5 general trading companies alongside Itochu, Mitsubishi, Mitsui, and Sumitomo. Consolidated results for the first half of fiscal year 2026. Net profit was 305.5 billion yen, up 28.3% year-on-year. Adjusted net profit excluding one-time items was 220 billion yen, down 1.8% from the same period last year. By segment, non-resources businesses recorded 163 billion yen, up 5 billion yen, supported by strong results in finance, leasing and real estate, and food and agribusiness. The resources segment posted 51 billion yen, down 11 billion yen, mainly due to lower prices in steelmaking coal and iron ore. Core operating cash flow decreased because of reduced dividends from equity method affiliates. Net profit progress ratio represents 60% of the full-year forecast, indicating steady advancement toward its target. Marubeni maintained its full-year forecasts. Net profit is projected to remain at 510 billion yen, and adjusted net profit is also unchanged. Within this, non-resources are expected to contribute 336 billion yen, while resources are forecasted to rise slightly to 122 billion yen, up 4 billion yen due to stronger copper prices. The net profit forecast includes a 30 billion yen cushion for contingencies, suggesting conservative planning. Marubeni also targets a 3-year cumulative ROE of around 14 to 15%. Additionally, Marubeni plans to maintain an annual dividend of 100 yen per share and a share buyback program of 40 billion yen. The total payout ratio remains around 40%, consistent with its policy of stable shareholder returns. The factors behind the year-on-year change in Marubeni's adjusted net profit for the first half. Adjusted net profit decreased slightly to 220 billion yen year-on-year. The main positive factors were improvements in existing businesses and profit growth from new and ongoing investments. However, these gains were offset by negative effects caused by foreign exchange movements and lower commodity prices, especially in resource-related sectors. In the first half, strong performance from non-resource segments and new investments helped limit the impact of unfavorable market and currency conditions, keeping adjusted profit almost flat compared to the previous year. Profit by segment for the first half, compared with the same period last year. In the lifestyle segment, profit decreased due to lower earnings from the pulp project, affected by weak pulp market conditions. In the food and agribusiness segment, profit rose, driven by strong performance in the instant coffee business, the U.S. fertilizer wholesale business, and Wellfam Foods, although agri company Helena and a beef company Creekstone recorded some decline. In the metals and mineral resources segment, profit fell mainly because of weaker earnings in the steelmaking coal business and the iron ore project, partially offset by improved results in the copper business. In the energy and chemicals segment, profit dropped sharply due to lower earnings from chemical-related operations and oil and gas exploration. In the power and infrastructure services segment, profit slightly increased, as gains from infrastructure-related businesses offset declines in power trading and power generation projects. In the finance, leasing, and real estate business segment, profits surged, driven by strong growth in the North American mobility business, Now Lake and Wheels, and gains from real estate integration with Dai-ichi Life Holdings and asset sales. In the aerospace and mobility segment, profit declined, mainly reflecting weaker performance in the ship-related business. In the IT solutions segment, profit increased, supported by steady growth in IT and digital solution services. In the next-generation business development segment, profit rose sharply, driven by growth in industrial solutions and the pharmaceutical sales business. Overall, the finance, leasing, and real estate business and next-generation business development segments drove total profit growth, while resource-related and energy segments weighed on results. In the second quarter, Marubeni invested in Marubeni Pharmaceuticals and Philips Healthcare, building on its earlier investment in Lunatus during fiscal years 2023 and 2024. Together, These companies form a pharmaceutical strategic platform that now operates across 26 countries and regions in Asia, Africa, and the Middle East. The pharmaceutical sector is a fast-growing field supported by aging populations, the expansion of middle-income groups, and rising health awareness. By the fiscal year 2031, Marubeni plans to expand this platform to cover regions with a total population exceeding 4 billion people, offering more than 10,000 products. Marubeni targets annual sales of over 100 billion yen and profit of over 20 billion yen by that year. This initiative demonstrates Marubeni's strategy to establish a global pharmaceutical platform that bridges healthcare disparities and builds a strong new earnings pillar for the future. Dai-ichi Life Marubeni Real Estate was founded on July 1, 2025, with each partner holding 50% ownership. It serves as a Japanese holding company specializing in real estate asset management, property management, and development. As of the end of March 2025, the combined real estate assets under management of its group companies totaled 1.78 trillion yen, making it one of the largest players in Japan's real estate asset management industry. It targets 3 trillion yen in assets under management by FY2031, focusing on residential, logistics, and hotel projects while expanding third-party asset management. Japan's real estate market has been performing well, with prices rising every year, and Dai-ichi Life Marubeni Real Estate also aims to build a leading integrated real estate platform in the country. Marubeni aims to maintain a total payout ratio of about 40%, continuing its progressive dividend policy. The annual dividend for the fiscal year 2026 is planned at 100 yen per share, consisting of an interim dividend of 50 yen and a year-end dividend of 50 yen, unchanged from the previous forecast. In addition, Marubeni is implementing a share buyback program totaling 40 billion yen, which is part of a 70 billion yen buyback program announced in May 2025. Marubeni emphasizes flexibility in buybacks and plans to raise dividends in line with medium to long-term profit growth. Marubeni's total shareholder returns, including dividends and buybacks, have steadily expanded, reflecting its policy of returning more profits to shareholders as earnings increase. Stock price. This chart over the past year shows the stock price in Japanese yen at 3,839 as of November 4. This chart shows the stock price in US dollars at 245.73 as of November 3. The stock price declined slightly after the earnings announcement, but partly supported by Berkshire Hathaway's ownership, trading company stocks have continued to rise steadily over the long term. Current PBR is 1.63 and PER is 12.4. Dividend yield is 2.60%. Compared with historical PBR, PER, and dividend yield, these figures suggest that the stock price is relatively high. Conclusion. Overall, Marubeni delivered solid first-half results, supported mainly by strong performance in non-resource businesses. Despite declines in resource and energy segments caused by lower commodity prices, Marubeni maintains stable earnings and steady progress toward its annual targets. Marubeni's continued investments in pharmaceuticals and real estate demonstrate its shift toward building new long-term profit pillars. Shareholder return policy, including progressive dividend policy and share buybacks, reflects its commitment to sustainable growth and shareholder value.